Good morning, ladies and gentlemen. Welcome to the show. Listen, today is Tuesday, April 30th, 2019, and we got a lot to talk about. So let's get the chart started right here, and let's take a look at what's going on. First off, these countries, are starting to repatriate their gold. Italy's trying to take control of the Italian gold reserves, and they got a lot. It's a five-star movement. They're asking Italy's parliament to approve measures that would allow private banks to sell their share of the Bank of Italy's gold. Italy has 2,451 tons of gold. That's a lot of gold. And it's not just Italy. The Bank of Romania has 103.7 tons of gold that they're talking about repatriating. And other countries, Germany has quietly called back 674 tons. Hungary has recalled 100,000 ounces of gold from the Bank of England. And these countries, are repatriating their gold. And, as the country's debts start to exceed their GDP, they're going to sell the gold. They'll sell the gold. The people will sell the gold. And so it's a lot of gold, that could be actually moving into the marketplace if these countries are successful in this. Also, central banks are also trying to accumulate gold at the same time. And banks now can count it as a Tier 1 asset. It's very important for gold where a lot's happening right now. Now, we're going to get right into the markets right now, and we're going to talk about the silver price. And we see the silver price dropping this morning. It's dropped substantially. And this is unusual. And the reason why it's unusual is the fact that the dollar's falling too. $14.82 on silver. It's down 7 cents on the day. Let's take a look at gold. Gold is down today too. It's $1,280. The moving gold downwards is not as much. It's saying that it's up ever so slightly, but it's moving down today with the dollar moving up. It's a very unusual circumstance. Let's take a look at Bitcoin. Bitcoin is $5,284. It's been holding steady up above $5,000, and we see some moves upwards in the market cap today. It was in the 160s yesterday. 171.8 was the market cap today, with a Bitcoin dominance that has fell back slightly. It was 55% yesterday. Today it's 54.5%, and we see all the coins starting to shoot up in price today. We see green numbers on all the coins. The gold market. They're actually, the truth of the story with the gold market is that there's more gold out there than there is silver. And there's an awful lot of gold being held in vaults around the world. Tremendous amounts of gold. Whereas cryptocurrency with Bitcoin, you have a set amount of roughly 17.6 million of the Bitcoin cryptocurrency. And there will never be printed more than 21 million. And so this hard limit on cryptocurrency, gold has actually got more of a loose limit to it. There's an awful lot of gold being held in vaults around the world. And as these countries start to repatriate their gold, what will they do with it? Will they sell it all into the market? It's an interesting questions here about this. Now let's take a look at the Dow Jones Industrial Average for today. We see that the market hasn't quite started yet. She was up 11 points yesterday. The Dow is being buoyed. It's being buoyed right now. And whenever you get a market that's being buoyed, what it reminds me of if we go back to Bitcoin, back when it was $20,000, Bitcoin was being buoyed. Any market, it's almost like it's in a bubble right now. And you know what happens to things when they're in a bubble. Bubbles pop. They always pop eventually. So I'm watching the stock market carefully, but this market has been buoyed up to infinity. Let's take a look at oil. Oil's made a big move today of $1.22 up, 1.92%. That's a big move up for oil. That'd be good news for the Canadian dollar. So we got a buoyed oil price. Oil's starting to get up, heading towards $70 for sweet light crude oil. If we see oil top the $100 mark, and there's oil that costs a little bit more than sweet light crude, so sweet light already it's probably up close to 70 or peaked 70. If we see it peak $100, if it keeps on riding up slowly, a few more months from now it'll be peaking $100. If we see it peak $100 oil, what we're going to see is an awful lot more oil come online. Oil wells that are unproductive right now will suddenly become viable, and they'll bring them online. And if that happens, we're going to see a glut, and we're going to see a substantial drop in the price of oil. So the price of oil going higher can actually lead to the price of oil going lower. Doesn't seem to make any sense, but that's the way things actually work in this world, especially in the oil world. How they work it is the big banks work closely with oil producers, and they give them loans when they see that it's going to be productive, and if it gets over $100 a barrel, of course it becomes suddenly very productive. These loans go out, new wells come online, and that's the way it works. And because there's tons of oil out there. It's just that there's not tons of cheap oil. What I mean by that is cost of production. There's tons of oil out there, but it has a higher cost of production. And so when the price of crude oil gets high enough to cover those costs of production, then all that new oil comes online that wasn't online. When the price of crude falls way back cheap, then all those wells go off of production again, and the amount of oil coming into the marketplace slips, and then the price goes back up again. And that's the way oil works. Let's take a look at U.S. Treasuries today. What we're seeing today in the Treasury market is we're seeing the long end of the yield rising, all except for the 30-year, and we're seeing the short end falling from the 1 year down to the 1 month. It's all falling yields. And so what we're looking at is still have an inverted yield curve, and it's really a strong inverted yield curve between the 2 year and the 3 year and the 5 year and the 7 year are all really low yields compared to the short end of the curve, which is much higher. So this is an inverted yield curve even still, even though we're seeing movement in the long end of the yield curve to rise. We still got a rather sharply inverted yield curve all the way up to the 30-year. The 10-year is ever so slightly above now. But that's, you got to hold that money for 10 years, and you're only going to get a difference of like a couple basis points. Are you kidding me? Let's take a look now at the U.S. dollar index. It was up to 98, and today it's fell back down to 97.55. Now, you know what? We should see a pop in gold and silver, but we're not seeing it. And this is very frustrating to me, the fact that the U.S. dollar index would fall off a half a penny and we don't see a massive move in gold and silver. I'm like, what's up with that? Generally when you see the dollar index fall a half a penny, generally you see a rise in the price of gold and silver. This is frustrating me, the fact that we're not seeing this rise in the price of gold and silver with the U.S. dollar index falling. I'm like, what's up with that, Listen, thank you guys for listening to this market report. And you guys have a nice rest of the day. And remember to give me a thumbs up. And we'll catch you guys in the next show. Bye-bye, guys.